for understanding what price is going to do. If you're bullish, if you think that monthly chart and that weekly chart is going to keep going up, and your daily chart just had a down close candle yesterday and hasn't changed anything structurally to indicate that it's going to keep going lower, it just went down into a discount array, into a daily fair value gap, into a daily order block that's bullish, then it's reasonable to anticipate the very next day what? The market's going to open, trade down initially. That's a Judas swing. And in that drop, I'm going to be buying that. If I miss it, if I miss the actual entry because I get to my charts late, something keeps me from seeing it at the chart, I'm talking to somebody, I just don't see it because I'm human. I miss it. I'm on the phone. Anything. I could be at the bathroom. You know, there's a number of things that's going to prevent you being in every instance of the trade where you can expect it for me. Because I've had a lot of those instances as a younger man, that's why I work so hard at creating new buying and selling opportunities to get into a trade that's already underway. So that's why I got 81 ways to do it. So if you're bullish, you're expecting that initial manipulation. So you're only focusing on worrying about where the low is going to form. If you're bullish, you're only worried about how the daily low might form and where it might form at. You're not trying to predict the closing price, because chances are your closing price might be lower than it actually is, and it could just keep going higher and higher and higher. So you go into an understanding of the daily candlestick forming by understanding what the monthly and the weekly and the daily charts are indicating. If you had a down close day yesterday, chances are, if everything's still bullish, you're probably going to have an up close day today. That means at 9:30, using the NQ, ES, and Dow futures as a medium to talk about this, at 9:30, what I'd like to see in that situation is an initial small little rally higher to get people in buying long. And then they drop it down into a discount. Some overnight low, relative equal lows, some overnight sell side liquidity pool, or maybe a fair value gap that's formed between, 2 o'clock in the morning to 9:30. And if it also overlaps with a new day opening gap, new week opening gap, or a first presented fair value gap from the previous day, chances are that's going to be the low of the day. But the key is if I'm bullish, I want to see two things happen. I want to see a small little minor rally first that trips in buy side breakout artists. They're buying on a stop. And then they're going to look for the most recent swing low. That's where their stop loss is. Well, that's where it's going to do Judas to and through. So it's going to jump a little bit, look like it's going to go higher. The public will chase that, even if they don't have a